Hello everyone out there, how are you all doing? I'm Kate Hill, bringing you the best and unbiased and honest content on property, along with fantastic hints and tips and news. Today, stay tuned and to hear why property wealth hedges against inflation. Real estate serves as a very powerful hedge against high inflation for several compelling reasons. Now, as a little refresher, inflation refers to the general increase in the price of goods and services over time, resulting in the erosion of purchasing power. So when inflation occurs, the same amount of money can buy fewer goods or services than before. It's typically measured using various economic indicators such as the Consumer Price Index, or CPI, you'll hear that talked about all the time, or the inflation rate. Inflation can be influenced by factors such as changes in supply and demand, government policies, and fluctuations in currency values. Moderate inflation is considered normal and can reflect a healthy economy, but high or rapid inflation can have adverse effects on individuals and businesses and the overall economy. It reduces the value of savings, affects the cost of living, and can lead to uncertainties in financial markets. Understanding and managing inflation is crucial for economic stability and financial planning. In terms of rising prices and eroding purchasing power, real estate investments really offer almost unique advantages that can help investors protect and grow their wealth. From the potential for property appreciation and rental income adjustments to the limited supply of desirable properties and the tangible nature of real estate assets, there are numerous factors that contribute to its inflation hedging properties. Additionally, features like inflation-indexed leases, the benefits of mortgage debt, and the ability to offset rising costs further solidify real estate's role as a reliable hedge. Diversification within an investment portfolio and the long-term investment horizon of real estate add to its appeal as a safeguard against these negative effects of inflation. So here are your 10 reasons why property wealth can hedge against rising inflation. Appreciation. Real estate has a history of appreciating in value over the long term. That's why we buy real estate. As inflation increases, the cost of goods and services rises, including the cost of properties. This upward pressure on prices can lead to the appreciation of real estate assets, allowing investors to preserve and potentially grow their wealth. Rental income. Real estate investments can provide a consistent and reliable income stream through rental payments. During periods of high inflation, rental income can be adjusted to keep pace with the rising cost of living. Landlords can increase rental prices to match the increased expenses, ensuring that their income retains its value over time. Inflation-indexed leases. In commercial real estate, for example, long-term leases can include inflation indexation clauses. These clauses allow for periodic adjustments to rental rates based on changes in that consumer price index or other inflation metrics. By incorporating inflation protection into lease agreements, property owners can safeguard their rental income against the erosion of purchasing power. Limited supply. Real estate is subject, like I said, to the principles of supply and demand. Land is a finite resource and there is a limited supply of well-located properties. As populations grow and demand for housing increases, the scarcity of land and desirable properties can drive up their value. This natural constraint on supply helps real estate maintain its value and act as that hedge against inflation. Tangible asset. Unlike financial assets, real estate is a physical asset that provides intrinsic value. During times of high inflation, when the value of paper currency can erode, real estate remains a tangible store of wealth. It offers a sense of security and stability as it represents a physical property that can be utilized or occupied. Mortgage debt, believe it or not, inflation erodes the value of money over time, but it can work in favor of real estate investors who have mortgage debt. As inflation rises, the purchasing power of money decreases. We've discussed this. Now, this also means that the real value of mortgage debt also decreases. Real estate investors can benefit from using leverage, such as mortgage financing, to acquire properties. Over time, the value of the property and rental income can increase while the real value of the debt used decreases, allowing investors to build wealth and increase their borrowing power. Inflationary protection of costs. Inflation affects the cost of building materials, labor, and construction. However, real estate owners can benefit from increased property values and rental income that can offset these rising costs. As property values rise, owners can see appreciation in their assets that surpass the impact of inflation on construction expenses. This can be particularly advantageous for real estate developers and investors in the construction industry. Preservation of purchasing power. Inflation erodes the purchasing power of money. The rising cost of goods and services means that the same amount of money can buy you fewer goods over time. However, real estate investments have the potential to preserve the purchasing power of money. As the cost of living increases, the value of real estate holdings tends to keep pace with or outpace inflation, enabling investors to maintain their ability to purchase goods and services in the future. Diversification. Real estate provides diversification within an investment portfolio, reducing overall risk. During periods of high inflation, traditional financial assets like stocks and bonds can be negatively impacted. But real estate investments have shown a degree of insulation from the volatility associated with inflation. By diversifying a portfolio with real estate, investors can mitigate the negative impact of high inflation on other assets, enhancing your overall risk-adjusted returns. And finally, long-term investment horizon. Real estate is typically considered a long-term investment. While short-term market fluctuations and economic cycles may impact property values over the long term, real estate has demonstrated resilience and the ability to weather inflationary periods. The value of well-located residential properties, for instance, has historically doubled-ish every 7 to 10 years over the past 4 decades. By adopting a long-term perspective, investors can ride out short-term fluctuations and benefit from the overall growth of real estate. The time horizon allows for the full realization of the potential appreciation in property values and the compounding effects of rental income, further solidifying real estate's position as a reliable hedge against inflation. So, real estate serves as a valuable hedge against high inflation due to several key reasons. Real estate has a history of appreciation, allowing investors to preserve and potentially grow their wealth as property values rise with inflation. Rental income from real estate can be adjusted, hopefully, to keep pace with inflation, providing reliable income that retains its value over time. Inflation-indexed leases in commercial real estate provide additional protection, if you can have one of those, by allowing rates to be adjusted based on inflation metrics. The limited supply of well-located properties contributes to their value appreciation as increasing demand drives up prices. It's a tangible nature that real estate has. It provides that sense of security and stability, making it a valuable store of wealth during these inflationary periods. Inflation can work in favor of real estate investors with mortgage debt, as the real value of debt actually decreases over time. Real estate benefits from the inflationary protection of costs, as increased property values and rental income can offset rising construction expenses. And diversification with real estate within an investment portfolio helps mitigate the negative impact of high inflation among all your other assets. The long-term investment horizon, really important. It allows investors to ride out all these short-term fluctuations and benefit from the historical upward trend. Real estate offers a range of advantages that make it really an effective hedge against high inflation. But it's important for investors to always carefully evaluate market conditions, location, lots and lots of other factors before making investment decisions. By considering the role of real estate and property within your investment strategy, you can position yourself to benefit from the wealth, preservation and growth potential it provides during these high inflationary periods. I will keep you posted, as always, on all things property from around Australia. Don't forget to hit the like and subscribe button if you are enjoying all the free content. Leave me a comment if you like, and I will see you all again really soon. Bye.